Let's get this show started. I'll remove the post-it note. Let's bring up the calendar. On the calendar this morning, we have oil-related news. It is Wednesday. And so we have wholesale inventories, and then everything else is oil, 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 oil. There will be speeches.
1 minute remaining for the US wholesale inventories month over month.
There will be speeches that we need to be concerned with, right? Fed speakers throughout the day. There's a whole series of them, right? So be aware. This may move the market. So let's go sneak a peek. And this is our daily chart. If you remember from a couple days ago, we are still stuck inside the measure bar. So we have a bullish bias still, right? Even for the last 3 days, we've been testing the measure bar. If we put a Fibonacci
10
inside,
seconds.
we've tested the 76, 88.
Minus 0.4%, minus 0.4% as expected. Wholesale sales month over month at minus 1.3%, minus 1.3%, lower than forecast 0.8%.
Right, so as we speak on the daily scale, we are resting on the 38% retracement, which tends to signify this is support and holding, and so should result in a bullish move from here. Right, so we've been testing our resolve for 3 days. Today might be the day we finally get paid, right? Or we finally get to see the goal we've been looking for, right? So in our case, the target is still 840, 850, somewhere around here. One way to anticipate would be to look at the Fibonacci from the bigger move, right around here. 840. Another way to look at that, maybe with an extension, right in this neighborhood here, 850, between 830 and 850, right? So there's a lot of opportunities. It's just a matter of deciding which way do we pick, right? You can be bearish for today. You could be selling the tops of green candles and still make money, right? But I choose to try and trade with the wind in my sails, right? So instead of trading against the wind, I would rather be, pushed in the right direction.
US wholesale trade March reports on the feed for anybody interested.
Right, so here it is on an hourly scale. This is what it looks like. And inside of this, we have to start creating the ladder, right? So if we just look at the inside range, which we're dealing with right now on an hourly scale, right? We have a ceiling right above us. Right now, it's right above us. We have a floor below, and then we have a lot of runway above us, right? We have this idea that this might be where we're trying to go to. All right, so let's take a look inside of this space here on the 5 minutes. All right, and then here you can start to draw the ladder. Looking left, you want to use previous price action. And then that allows your brain to kind of foresee what the market may be attempting to do or trying to achieve, trying to accomplish. Right, so I'm just using my mind's eye and I'm looking left to see where these levels are, these flat spots, right? These shelves, if you want to call them that. Right? And then over time, this builds a ladder, And each one of the rungs on the ladder becomes an action point or a call to action of some sort. You know, you ask yourself, what will you do there, if anything? You know, maybe you will add to your winners, which is quite the opposite to martingaling. I'm just looking inside that little area there. Maybe I'm way off and it's there. Right? We don't know. I'm just using my mind's eye and trying to connect as many dots as I possibly can. Right? Stuff like that. Right? And now we have this ladder. If you measure the rungs on average, they're about 9 pips apart. In this case, it's 8, 8, 9, 8, 8.5. If you do this over and over and over and over, you'll find the average is approximately 9 pips, right? And these lines go on forever and ever and ever. And so what we do is we take this average of 9 pips and we use it with an end time in mind, right? So there's an end to these lines. They don't go on forever. And something must have happened by this time, or we will do something, right? So it's a call to action, and we have a call to action on 3 sides of the box. We just follow along, right? Inside the box, we can make money. 3 pips, 3 pips, 3 pips, all right? Just like I was doing back here. And this was at 6 o'clock this morning. This was at 5:30 this morning. I took a few trades last night before bedtime. And this was at 8:30 last night. And then if those of you that played yesterday or traded yesterday in our group session, we made money in the group session. If you had trades remaining open yesterday, this is what we were looking for. And we actually got quite the opposite. Right? However, if you played between the hours of 8 and 10 my time, so 10 and noon Eastern, you survived, right? You survived the 36 pips. And so now you're on your way back up, right? So the goal is to survive, right? Don't lose what you start with. So you're in this defensive mode all the time. And then whenever you see a high probability trade, you take it. Right? So I took one trade right here, right now. Right? I'm bullish for today. I'm trying to go up the ladder. Right? So I'm expecting the price to find support. And somewhere around here, there's support. What was once resistance becomes support. And eventually I want to benefit from that, right? I'm just trying to find where exactly. Maybe it's the bottom of the box, this level here. Right? Once I'm reassured that I have found a level that I can lean into, I place a trade. And it's only because of the probability of a bounce. Right? I'm not trying to go to the moon with buying this level here. I'm only trying to make 3 pips, and I'm trying to recycle that 3 pips a couple times. Oh, more than a couple. The fun part is this unknown, right? It's always the challenge. We have a limited amount of tools in our tool bag, money, and it's up to us to figure out how to use those tools, right? How do we spend this money to get out of this? Maybe we just take a loss. All right. So ideally, you're always coming up with a solution. You're working a problem that may not be a problem until the proof is there. You're just trying to resolve it before it's too late. Right. So yesterday as a group, we traded oh yeah, I forgot to mention. I took a loss. One of these trades from 2 days ago, I forgot I still had a stop loss, one stop loss that I forgot to remove, and it cost me 36 pips. Okay, so when we're hedging, you have to clean up the slate as you're hedging, and I forgot one, and it cost me 36 pips. That's okay. You know, we recover 2 pips at a time, or I recover 2 pips at a time. Right? Looking at the statistics, it's not like we've destroyed the account. Well, it's one loss. If I look overall, you know, all history, we're still up about $1,500 in this particular account. Profit factor $5. Total trades 1,500. Right? Total pips 4,500. Average trades are all 3 pips. And if we look symbols, it's all been on the euro. Right? About 900 or 891 longs, 660 shorts. Right? If we look at average days, you know, 96% wins, 3% loss. 99% win, fraction of 1%. 100% win, 98% win. Right? So the strategy is self-fulfilling as long as you help it float, right? You have to be willing to shift from one side of the teeter-totter to the opposite side of the teeter-totter. Right? I'm not a swing trader. I'm clearly balancing from longs to short. And we do this balancing act on a daily basis. And this is why we're trying to go flat every day. Right? In my particular case, in front of you, I'm running 8 hours per day, sometimes 10 hours per day, depending on, you know, the students that I'm working with. And so I'm forward testing the strategy, right? I'm creating a mess for myself by over trading literally every day. And for you guys, it's best if you just do a couple hours and walk away. Right? So if you can walk away, then you get to keep that money for today. Right? Okay, so the trick to all of this, right? The trick to all of this is to trade the 2-hour window and then be done. You know, be done. If you try to overtrade, you're begging for trouble, and you know, ideally, you're becoming inconsistent by breaking that window of time. Right here. All right, from the group session yesterday, where were we? Right up here. Between the hours of 8 and 10. So that's 8 o'clock. This is 10 o'clock. Right there. Oops. Right there. Right. The trades I took in that zone closed. And the one that remains open this is the low of the day there. Right there. Right. So hence the hedging. Right. If anybody trades within that 8 to 10 hour window, sorry, 8 to 10 2-hour window, you have the ability to manage what's happening in that 2-hour window, right? It's all about the drawdown being respectable to you, right? You have to manage the drawdown. You have to have drawdown to make money. Right? It's objective. You know, we have an ejection seat because I have personal standards. You know, I don't want to lose hundreds of dollars. I want to lose the same amount consistently. And so you can pick whatever number you want, right? 4 boxes is the norm. If you can't manage 4 boxes, learn to lose at 2 boxes, right? If that's still too much money, then learn to lose within 1 box. It's all about learning to lose. It's not about chasing the wins. All right? So here we are. You know, our first trade as a group has made us money today. Let's see if we can repeat that process. All right. Yeah. Sometimes it's a marginal, you know, it's the market uses 38 pips, the market will use 32, and we have a target at 36. You know, we have an ejection seat at 36. The entry, if that's, you know, if it's that critical, you know, buying the wrong end of the candle might just be enough to trip that 36 pips. It could be a million different reasons. I just want to find out, when I lose, I want to find out how did I take the entry? When did I take it? And it's if I was breaking rules with the entry. Because once I'm in that trade, it's a probability. I cannot choose what comes next, right? I can kind of control what I see in front of me by adding trades or removing trades. But once I'm in the trade, the market is flowing with it. And so that's it, right? It's a two-step operation. You follow the rules, you're wearing the trader's hat, it leads you to clicking your mouse. Now that you're in that trade, you have to switch hats and put on the risk manager's hat and manage what's there. You know, book losses before they hit your stop loss. Average your way out. Maybe you need to average your way in. This is what we're learning to do, right? Instead of putting it all on the line with one bet, we took the same amount of money and split it into 4 trades. And they all paid. Boom. All right, we just want to do this over and over and over and over. We happen to be adding to our winners, right? We just close one to reopen one, close one to reopen one, close one to reopen one. All right, so I took a trade on that red candle. It happened to trigger right there on the green candle. Let's just recycle a few more of these trades. While we're waiting for this, we can go take a peek at the dollar index. 4-hour chart. We have this measured move, sideways range, double top. We broke the range 2 days ago. So now that becomes a measured environment, and we delivered the measured move. And then as of yesterday, support became resistance. And as of right now, we are testing that resistance and expecting the Dixie to come off it, right? To come down off it. If Dixie comes down off of resistance or bounces off of it, it bodes well for our euro going back up, right? So when we look at the euro, we have a very similar situation, right? Go to a 4-hour chart. And here it is, you know, delivering us a similar slash support becomes resistance, or in this case, resistance becomes support, and we're bouncing off it, right? So it's ideally what we're looking for, except we're not trading the Dixie. We're just monitoring the Dixie because it represents about 58% of, no, it's made up of 58% euros. So it's a good proxy for what we're looking to do. I'm trying to size my box. I'm trying to zoom. There we go. There we go. Now I can see. All right, red candle. Let's repeat this again. And then we leave the casino, hopefully within 40 minutes or so. I just took 2. All right, so like I said before, I'm still managing trades from
At 10:30 a.m. Eastern Time, we get our weekly EIA data. Crude oil inventories forecast draw 1.4 million on the prior build 7.265 million. Gasoline inventories forecast draw 1.18 million on the prior build 0.344 million. Distiller
never mind all that stuff. It's like they've got 25 guys with 25 microphones at 25 different levels. So getting back to this, we want to buy a red candle. I've got 3 already, and like I was saying before, I'm still managing trades from last Friday, one of which cost me money already. So I'll get myself a little bit more real estate. It's easier to see this way. All right, I'll go back to my 5-minute chart. And we can watch the ladder. Are we going up the ladder, down the ladder? It looks like we're trying to go up the ladder. And then we have to see if we can find our way to the top rung. Yeah, Jasper is turning busy again. Summer is almost here. Lots of tourists are starting to come through. It's a small town. There's only, maybe 5,000 people that live here, but we see a couple million, maybe 2.5 million tourists per year that come through the national park. And so the town of Jasper supports the national park, the tourism industry, and I just happen to live in the national park. It's busy, 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 full of hikers and campers and people enjoying the outdoors. It's a very young crowd here. All right, I'll take another buy here. The targets are within the box. The entries are within the box. I only have 3 trades on the books within our group environment. All right, so let me put a vertical line right here, 8 o'clock. And then we'll keep going until I have, 20 winners or so. All right, so the goal is to operate with the start time and then end time. And then within that window, you have a potential average yield, right? And then you strive to reach that average every day and then walk away. If you start earlier, you end up managing those trades outside of your 2 hour window. And if you stay later than 2 hours, you end up managing those trades into tomorrow. So hence I'm still running trades from 2 days ago. Right? I'm still running trades from up here. Right, so hedging kind of has been my way to survive the last 3 days. Right? If you commit to a 2 hour window, you don't have to even learn how to hedge. Just learn how to lose. All right, our expectations are out of alignment. Everybody, you know, once you understand what the market is capable of in a certain amount of time, you stop asking for the world and you just ask for that in that amount of time. Red candle. I'll repeat the trade that closed a second ago. So we've got a couple of wins already. Over time, you'll find yourself probably trading more than 2 hours because you'll have the skills to manage whatever trouble you put yourself in. Right? At this stage of the game, you're still learning how to lose. If you're learning to hedge, you're basically now willing to lose in both directions at once. Most people don't have that ability just yet. That's something you graduate into. Lose in one direction before you lose in both. There's 3 clicks in this box. All right, still looking to go up. And again, I'm just some dude on the internet, man. I don't know poop. This could be going the wrong way in no time flat. So be careful. I'm just showing you how I do it. And this is when I started. All right. I'm thinking a couple more boxes to the upside. This is my break even for 3 days of trades. Okay, so I'm like 4 boxes away from breaking even. 3 boxes away from breaking even. The size of the monies that we are working with is microscopic compared to the size of the account. Right? So this is why we can cover a lot of ground. Right? You don't have to be nitpicky. You just have to have a plan and see it through to completion. Right? My plan has been targeting that 850 area since last Friday. And I've been making money every day since last Friday. Booked a couple of losses along the way since last Friday. It's normal. It's part of the process. Losing trades. Current week, 1. Last week, let's see, previous month, 20. Right? We have to learn to do this. All right. We're almost there. Then we'll be able to close 3 more profitable trades. And then, you know, walking away from the casino becomes the toughest part, right? You only have 10 trades, 15 trades, and all of you, I'm sure, are trying to make millions of dollars. And you're laughing at me because I'm telling you to leave the casino. Yeah. It's something you need to, and it's intrinsic learning, right? You have to touch the stove to realize how hot it is and never touch it again. And so you literally have to overtrade to figure out that overtrading is what's killing you, so that you learn to not overtrade. Especially in this, right? We are day traders. It's by definition. If you want to do swing trades, go ahead. You know, there's nothing stopping us from swing trading. It just doesn't suit my personality. I'm more agreeable when I can manage a handful of trades at a time than watching one trade whip me around. So this is what the alert was. Oil news just came out.
Crude Cushing inventories build 1.88 million.
He's still screaming.
Million. Seeing some upside in WTI crude oil.
Red candle. I have my 4 clicks in the box. So that will make us 6 winners. All right, so if we go back just for the latecomers, just to review, when we're looking at the daily chart, today is no different than the other previous 2 days. We are still within this measure bar. And then within this measure bar, we have to assume the bullish bias. And so we have been a bullish trader for the last 2 days. Today is no different. And you know, depending on how you position yourself, the entries, you know, bottom of the candle versus the top of the candle, and the time of day, you have the ability to survive these types of events, right? If you don't, you come back tomorrow and do it again, do it again, do it again. It's this wax on, wax off. It's intrinsic learning, right? You have to learn from making mistakes and then tightening up your game ever so slightly every time. Right? You're aiming for excellence, not perfection, right? So it will take time. Right? Don't assume you can win at trading in a weekend. It takes a lot of time, a lot of bad trades. Right? Here's 4 clicks going the wrong way. I'll take a 5th click in here, right where we are now, right at this.
I have posted the EIA weekly petroleum status report on the feed for all those interested.
At this level right here, looking left. And this is just waiting to see where we go next. Okay, so from the daily chart, we're still within the measure bar. When we zoom into the today candle, we are looking at a floor and a ceiling that are miles apart. But then if we look a little bit closer, we have the floor below us from 5 or 6 hours ago. The ceiling above us, we just tested within the last hour. And if we look at this on a 5-minute scale, then you can start to appreciate the ladder. And as we speak, we're coming off the wrong, right? 5 minutes ago, soup. And now we're approaching this one, right? And as we speak, I'm buying in this area here. Right? So we're not buying at random. Look left. Right? Look left. There's this right here. Right? This area here. This is what I'm picking up. Right? Bottom of the box, right there. And now I'm done clicking in this box. I have to wait and see if I have an opportunity to click in this one. All right, let's see if it bounces back up. All right, do we get to leave the casino? Looking at this on the 5-minute scale, it looks as though they may be trying to screw us over. Right? Wouldn't be the first time. All right, where does that lead to? 746, 747. Right, so around this area here, bottom of this box. What if we put this right there? Where does this go? 746, 745 and a half. Best part of trading is nobody knows. I think that's why I'm drawn to this. You know, it's all a bunch of assumptions. You stack a few of them together. Maybe you have a series of wins. You know, the assumptions are more or less every 3 pips, and you have a choice to take a trade every 3 pips or so. And this is how you end up with 3 to 4 clicks per box. It just makes sense. Spread the risk instead of just throwing one dart. All right, these outside ranges, trader's worst enemy. By definition, they're just pushing lower than the previous low, and they keep doing this until they've removed most of the weaker players. Right? And then they'll push it in the opposite direction, take out the highs 2, 3, 4 times in a row. This is starting to look like a channel. I don't want to, let's actually just add one more instead of moving it. Right there. Right. Trader's worst enemy, outside range. All right, so let's just wait this one out. We want to close this box. If we're prompted to put trades in the box number 2, That's okay. All right, we have an average of 62, and I don't think today is anywhere near 62. All right, today is maybe 36, 20. All right, so in the last 18 and a half hours, the market has moved 2 boxes back and forth, back and forth. All right. That's how the market gets under our skin. Right? We want to see something happen, and it decides to just do nothing instead. Just waiting to see where this will take us. There we go. All right, so it's a bunch of assumptions. The market exited this previous box right there. So if we put a box on that break, we're literally going sideways. We have not reached the top of the range. All right, if we break lower, we can go here first, and then here second. $740, $735. It's a measured space. It's not as random as we're told. Or led to believe. Right. And then postponing gratification, that's where we lose a lot of the traders. Right. Most guys want to make their money right now. So they're looking at trading the current move, what's in front of them right now. Not realizing that whatever is in front of them is not going to last forever. And so by using a couple of different time frames, you can understand what an average looks like. And then when average is complete, you can maybe see where the next move starts. Right? So it's by looking for average moves, eventually we're led to seeing the next average move, right? Because the current one is coming to an end. Right? So we're looking at average hours, average days, average 5-minute ranges. It's like when you're driving your car, after a little while, you know how many miles per gallon or kilometers per gallon. No, you can figure out in your mind how far you can still go, how much more you have. This is kind of the same idea, right? Look at the gas tank. Look how much an average bar gives you. In our case, right now, a 5-minute bar is 3 pips. So it looks like in order for us to make 3 pips, we have to wait 5 minutes. Right? So from wherever you put your entry, you may be waiting 5 minutes to make your money. Right? That's an average bar, 5 minutes. Pick the entry. Pick the entry just right, right at the level, on the right color candle, and you may be able to shave 1 or 2 minutes from the 5. Right? Buy the bounce. Don't chase the bouncing. Right? Buy it on the way down instead of chasing it on the way up. This is how this method works anyways. You can, you're free to do whatever you want. I'm just telling you how I've been doing it. All right, so we're past the bottom of the hour. That is typically when we have the pullback that we've built into. And now we're heading into the London fix. Some people call it the UK fix. And end of month, beginning of month, usually with that brings volatility at this time of day. Right, so it's banks that are setting themselves up to close the bank on schedule. And sometimes it brings volatility. Right? So that's the unpredictable part. We know it happens on time, but we don't know what it will bring on schedule. And so we're ready for it. As expected, they're causing some grief, inflicting some pain. Right? The pain is real if you have too much money. Oh, here we are, breaking down one box. I just took a trade, right? I'm buying support right here, slash resistance, slash support. The inside of this swing right here. If it fails and goes lower, so the bottom of the box is the outside of the swing. Right, so the outside swing becomes my next trade. And so if we go and test the low, which is over here, over here. All right, let's see what comes next. That's the best part. You have a alternative for every move the market makes. Just like when you're playing chess, you're thinking of a bunch of alternatives because you don't know what the other player has in mind. It's very similar here. 12 minutes or so, and we'll have to let you go. Right, ba-da-ba-ba-bum. Gotta leave the casino every day if you call yourself a day trader. It's only because we broke this box here on the side right there that I'm starting this box where we are. where we finished the pre-existing box. I start this one at the same time. Whoops, we would have been able to put one box right there. And in this case, it picked to go up, right? It chose to go up until now. Boy, oh boy, oh boy. Outside range it was, apparently. We'll see how much further we can go on this green 5-minute candle. Just for curiosity.
7 a.m. Eastern Time, we expect comments from Feds Jefferson, who participates in a moderated discussion on careers in economics.
Just getting ready to spend some money in case it drops a box. I already have that trade, so I'm looking to spend more here. And where else? Where else? Let's turn off the deal map so we can see. Maybe we can spend more money here, in this area there, and the inside swing. And then ultimately we have the bottom of the box. Remember, we only have maybe 30 pips on the day. We're still looking for 4 more boxes. And that's the difficulty, right? The dilemma is, where will these 4 boxes come from? What will create this move to give us 4 more boxes? If the calendar is super, super light, if there's a lack of catalysts, that move could come at any time, anywhere, for whatever reason, right? It's no longer connected to a news event. So we don't lose sight of the target, much like a boat in the ocean doesn't lose sight of the port. You just have to deal with the weather. All right, so we're dealing with the facts, and we know ultimately I want to be selling up here. It sounds freaky, eh? Because it's literally so far away, like it's miles away. But in reality, we're only looking at 100 pips, right? At this rate, we're 2 days away. It's doable. Right? We've moved 100 pips in 1 day before. I really want to see these trades close before I let you guys go. Oh, this box is a little bit too big.
The S&P 500 edges up 0.04%, and the Dow gains 0.2%.
Oops. Okay. All right, let's see what comes of this. A lot of what we're doing here relies on the dollar index doing its thing the way we saw fit, the way we saw it earlier, right? Right here, right? A lot of what we've done with the euro is a result of what I've seen happening here. Right? So a week ago, we were working off of this. Right? A week ago, this was a channel, and then we finally broke out of the channel. And then when we broke out of the channel, realized it left behind a double top. And so the double top is in and of itself a pattern, and it has a probability built in because it's a channel. No, it's a sideways channel. And so by the time by the time we see this average move right here, and we had the break of the channel last week.
Time we expect comments from Beds Jefferson, who participates in a moderated discussion on careers in economics.
The market gave us that measured move. This has to go a little bit lower. Somewhere there. Okay, so ideally, it switched from a flag heading higher. It rotated, made a double top, and now we're hoping to push off of resistance and go back lower. Right? We're hoping to get back here. 104.50. Right? This may take a day or two. We'll know today if we go higher or if we go lower. Right? We are at resistance. And so let's see what the euro is thinking. Oh, here we are, bottom of the box, opportunity to buy. If you can, take a trade. All right, this goes there. This is my box number 2 down here. And so I have 2 trades now in box number 2. And I'm waiting to see if I get to spend a few more. We are approaching the London fix, about 5 minutes away. We've respected the ladder on our 5-minute chart. We respected the ladder. We're actually trapped between 2 rungs right now. And we've also tested our outside range assumption. We're doing pretty good, folks. All right, so assume this was a low. Well, it's just an assumption. If I put the box there, it leads me to believe the market can and has the ability to go all the way here, without interruption. If it's anything faster than this, so if it comes out like straight up, it's because we have incoming volatility. All right, so, and that is something we're measuring at this time of day specifically, right? 11 o'clock Eastern. I'm just going to reset this down here and assume that we just went sideways for 2 hours. And now, because I went sideways for 2 hours, I now have 6 or 7 clicks in one box, right? I have 4 or 5 from box number 1 plus 2 that were in box number 2 here a minute ago. All right, so
China's military say they followed and monitored a US destroyer, USS Woolsey, transits in Taiwan Strait.
all right, so if I assume this is a low, I'm now looking for something like this. And that should take an hour to get here. Anything faster than an hour,
Shortly expecting comments from Feds Jefferson.
we'll see what happens. Fed Jefferson may change everything. Let's turn on the deal map. There we go. And then let's watch our trades close. A little something, something. If you can take a trade, these red candles at support, it would be ideal. Come on. Slow news day today. It's all news, it's all oil related, and leaves us having to second guess every one of our decisions. Just remember that if the market pushes into box number 2 and you're unable to close trades in box number 1, you might be better taking a loss, right? It doesn't have to be a fight. You don't have to use box 3 and 4. All right. I'm using boxes 3 and 4 because I start usually on time, and then within those 4 boxes I have an expectation, and so I'm working from experience. I'm working with an expectation, right? I kind of have this average that I'm aiming for, and I'm operating within these averages. So 4 boxes for me is normal, and what I get from those 4 boxes is normal. What you're learning to do is behave in such a way that you have consistency, and you're looking for what is normal for you. You're trying to build that, out of thin air. So if you know you're capable of doing 10 trades per day with little to no damage, then stop at 10 trades, right, with little to no damage. It's when we do 15, 20, 30, all of a sudden we lose the original 10. All right, so here we are with a couple more winners added to our books. 1, 2, 3, 4. We get to recycle these trades on a red candle right now. 1, 2. I just took back the 2 trades that closed. And depending on how you stack your boxes, you may not be able to afford until you close more. right? There's a lot, that discretion that you have here is for you to try it out. Just practice. You know, don't try and be a winner right out of the gate. You have to practice losing. You have to understand how this thing moves, how it behaves, how it reacts, and then you are reacting to what you see. All right, so what do we have here now? 1, 2, 3, 4, 5, 6, 7. I have to stop. I'm at 7. And that's 2 boxes. Won't take much longer. We'll have closed our today's trades, or we'll be managing them. Right? And that's perfectly fine. If you're running out of time, oops, I didn't want to change this. If you're running out of time, then take losses in here while they're still cheap. Right? These are pennies on the dollar, and if you wait 4 boxes to lose, you're losing dollars. Right? So, choice is yours. Right? The goal is to try to avoid getting painted into a corner. Like, you want to have backup for the backup. You don't want to be forced to use any kind of backup at any time. You know, if you're forced to use backup money, it's because you're in trouble.
The defense minister says the mission in North isn't completed. This might be a hot summer.
All right, we'll just leave it like it is here. I'll take one more trade right there and call it 8 trades. And if I stack my boxes the way they were stacked originally, I have 8 trades into 2 boxes. And if we're wrong, we're wrong. Or if I'm wrong, I'm wrong. Right? What if we go down to the bottom of the channel? Right? What if we keep going down before going up? Right? It's still a higher low. Right? This is still a higher low. Yeah. After a while, you become a broken record. Like when you're speaking to yourself, except I'm doing it out loud. When you're speaking to yourself, you start repeating the same train of thoughts over and over and over, the same processes, the same subroutines. Right? It's the same playbook. If you get excited every time you win, you might be doing something wrong. All right. What a boring day. 24 hours, 20 pips. Hmm. 10 years ago, 15 years ago, the euro was moving 250 pips per day. And now we're barely moving 60, sometimes 50. Today, 20. And yet we managed to make money from this. Just waiting, waiting, waiting. without the news, without the catalyst, you're relying on price action to tell you what to do. And then you have to keep your eyes peeled because as you see here, the bars are shrinking. And then after a little while, the opportunities have shrunken away. And so this is why keeping an eye on the clock is so important, right? Because at some point you come to understand it's no longer worth it. Risk management. Yeah. The dollar, the dollar index is threatening. Dollar index is threatening to break higher. Right? We have to see what happens here in the next few minutes. Depending on which broker you have, you may be able to pull up the dollar index from within the broker itself, like without having to use TradingView. If you're using this broker here, I'm pretty sure they have it. Yeah, US index right there. 105.60, 105. Yep. This is it. Right, so they have the dollar index within the platform. You don't have to use TradingView. Right, bottom of the box. We saw this level coming a mile away. If you can take a trade, take a trade. I'm already at 8, I think. There it is. There it is. Right, so anyone that's following this right here, that's reading these candles, they're looking at lower lows, they're looking at red candles, they're looking at a bearish environment. A lot of folks will be compelled to sell this, right? But if we look to the right, or sorry, to the left, you can see we're approaching support. And so our objective is to test support and not chase, right? So now that we're outside of the original box, this actually puts me into box number 2. Right, this is my box number 2 originally. I'll take another trade here. This is just a measuring cup. It allows us to see where the market has the ability to go, right? From this point right there, the market can move 9 pips. Right? From the top up there, up here, we've moved slightly more than 9 pips. Right? 9 is just an average. It happens to be pretty accurate most times. Right, let's see if this is a low. Let's assume this might be a low, and let's see where we go from here. All right, the assumption is the same always, right, from corner to corner, and it's a matter of time. are. It's almost made for TV. Perfect, perfect, perfect. I like what's happening at the time of day that it's happening at. Right? Testing the inside swing right in time with the London fix. It tends to build upon itself. Right. By the time it's lunchtime in New York, we want to be finished our day trading activities, if possible. You know, that's the aim. That's kind of the premise of managing the risk, and that's also when we know that overtime turns free. Right. So we don't want to work for free. It's just too risky. So not another hour and a half or so. Lunchtime, New York. That'd be kind of sweet. All right, so those of you following along, we've built a long position along this right there, and we are now waiting for something like this. It's unbecoming of the euro to have only, what, 30 pips in 18 hours, 19 hours. All right, it's not normal. That's kind of crappy. 21 pips, right? And so that's kind of the problem, right? This is unbecoming of the euro. It's not something we would expect to see. It's something we have to live with. Right, so we built a position, postponed gratification. This is gratification that's forthcoming. All right, so we're just waiting to see this. Something along that effect, something along those lines. Right, preferably will be done somewhere around here. 10:30, 11 o'clock. Right, somewhere in here is where you want to be finished. Right, so built longs, and now we wait to get paid. And we do this more or less every day. Sometimes it's in the opposite direction. Sometimes it takes 24 hours to get paid, and sometimes it takes one box, 10 minutes. It could be an hour, it could be 10 minutes, it could be 1 minute, it could be whatever. The box is just the average, right? Average number of time bars and average number of pips. Yeah, I gotta go get my meds ready. All right, so that's the plan. Don't touch your stop losses. Don't touch your targets. If you move your targets, move them to break even, so at least you're not asking for more. And wait and see, right? Wait and see how many boxes you're forced into. If it forces you into down here, you may consider just take the loss. Just take the loss, right? Instead of fighting and fighting and fighting and fighting and fighting. All right? Learn to lose. Eventually the fight will come, you know, it's inherent. You don't want to be a loser forever. You'll figure it out. You know, the solution is right there in front of your nose. Your solution. It may not be what I'm doing. All right. So in theory, the plan allows you to spread your risk as evenly as the market gives you the probabilities, and then you just wait it out. You know, you've done the deed, now let the market do its job. You have limits. You have an upper limit, a lower limit, you have a start time, you have an end time. If you operate within limits, and then the boxes within those limits, you're controlling a lot of stuff. You may not realize it. You're taking a lot less risk than most, is what I'm saying. Right? So understanding what we're capable of is really part of the deal, right? That's why you need to review your journal, review your successes.
BTC Azeri light crude loadings to rise to 613,000 barrels per day in June.
Review your failures. That's the toughest part, because you have to keep reminding yourself that you took a loss on that particular trade and you're trying to figure out why and what went wrong. And typically it's the operator, right? So it's always us that blames us. And you have to kind of do that, understanding that it's a probability, right? You're not pointing fingers. So it's perfectly fine to look at your mistakes and not call them mistakes. All right, this is what we're wanting to see. All right, let's see if we can get paid from this behavior. The same behavior we express every day. If I happen to come in at my 8 o'clock and it's near the low of the day, depending on how much we've done and what the bigger picture tells us, we oftentimes add to what's missing where we are right now, right? But today, we're still trapped inside this measure bar. And so we have to assume the measure bar, even though it's a red candle following a red candle, making lower lows and lower highs, right? All of this here kind of means nothing because of this. Right? We are still within this big candle. It's as though the last 3 days have never existed. Right? We just happen to be, as we speak, right here inside of this green candle. Right? So we have to assume a bullish bias. And then with that assumption, we've been making bullish money 3 pips at a time since last Friday. And I've accrued $350 of drawdown out of a $12,600 account. Right? That's next to nothing. And how we manage this drawdown, right? These are open trades. This is not loss. Right? Big difference, right? A loss is if I close the trade in drawdown. Right? So because these are still open, I choose when they're closed. and I control drawdown. I manage drawdown, right? We spread this risk on purpose. Now we're waiting to get paid. Another 5 minutes, and I'll have to let you go. Yeah. Decided to take a loss early. Yeah, that's exactly the idea. That's, you know, sometimes you're better off taking, like booking it, and then you can either reset if you have time or walk away and come back tomorrow. Reset tomorrow. It's not a race to the finish. That's where we all fail, right? Because we're all here to make money, even though I'm trying to get you to not think about it. Right? I'm trying to get you to think about the losses. Manage the losses, manage drawdown, and prevent drawdown to turn into a loss, right? You're using drawdown because it's necessary. It's a necessary evil. Right? It's the fuel that you need to move forward. All right, so there's a couple of trades of my drawdown just closed. All right, so I'm lightening up the load, putting money in the account. Postponing gratification is getting paid. Right? Preferably, I want to be done here. Right? 2 hours. All right. Recycle, red candle. I have one there. I'll take it back. I'll recycle that one click. And I'll remove this, and I'll remove this. All right, so come on, give me red. Boom, right there. So it just took the trade that closed. I put it back on that little red candle that was there for a millisecond. I was kind of hoping for a red candle down here, but it never showed up. Couple more minutes, and I have to go and follow my regimen. All right, we want to keep eating away at the drawdown. If we close a trade, you can recycle that trade provided you're not running out of time, right? You want to have the runway. It's just pretty sad when the day, 20, well, it's almost 18, 19 hours now, 20 pips. My goodness. Compared to this or any of these days here, this is disastrous for a swing trader. Anybody that's trying to catch a move is getting chopped to bits. All right. They have to be super patient. Anybody that's playing breakouts has been lied to on top and bottom, unless they have really small, achievable, repeatable targets. Maybe 1 or 2 standard deviations, nothing more. Right? We tend to lie to ourselves. Our expectations are out of this world. The market has the ability to deliver, but not what we think, right? So figure out what the market does in your 2 hour window and then extract that. Right? Here's that candle we were looking for. Uh, 350 out of 12.6. Let's go back to the 5 minutes. I'm curious to see how it's behaving around the ladder. So there's our outside range. It looks like we've tested it 3 times or so. Let's see if we can test the top. That would coincide with the top of the channel. An average day is 62, 63. What if this was the low? Average day takes us to 08. Or if this was the high, '07, I want to sell from there. Right. Sneak a peek over here real quick. Our dollar index is coming off resistance right here. All right. As long as it turns more and more bearish, our euro should profit by itself. And I have to let everybody go. I have to go and take care of my meds, and I'll see some of you guys on my calendar, and some of you I'll see you tomorrow in this live session. Trade safe, everyone. Don't touch your stops, don't touch your targets, and no, just let it slide. Thanks. Bye-bye.